tutorial 4 on your side?
Yes.
Yes,
All
sir.
right. So John Marubi is 55 years old, so that is less than 65 years. And guys, this is important, especially when we look at exemptions for interest and all of those things, because you know, for under 65 years, 23,800, over 65 years, 34,500. So I would highlight that because that's important to me. So John Maruba is 55 years and a financial manager at Checkers Limited. He has been employed by Checkers since 1993. And once again, I will highlight this because this looks like a long time. The following is applicable for the 2020 year of assessment. And then we are given information. On 1 April 2002. No, guys. Oh, yeah. John and his wife married out of community of property. Okay. Moved from Bloemfontein to Johannesburg when Yuan, you see it's even now John and then it's Yuan. Should be John. John was offered a position at the Checkers office in Johannesburg CBD. They have two boys aged 14 and 16. And for investment purposes, John has purchased a townhouse for 1.5 million on 1 October 2011 to rent out. During the 2020 year of assessment, he charged rent on the townhouse at 9,000 per month. Then John receives a cash salary, blah, 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 blah. But anyway, guys, I want us to go to the required because I'm scared we will not finish. Let's look at what are we required to do. Calculate John Maruba's income tax payable. And this is something that you need to be very careful of on Friday. If we say income tax payable, that means you need to go all the way down in terms of your, in terms of your framework. Let me show you. So let me make it a bit smaller. If we say income tax payable, so year tax payable. So do you see you need to go all the way down, all the way down. If I said taxable income, then you didn't have to go down here. Okay, if I say only gross income, then obviously, you would have ended here. You don't include, or you will also include fringe benefits, but you don't have to include exemption. So it's important that you guys read the question properly. For the 2020 year of assessment, show all your workings. Yes, so let's start. And guys, just some advice. Let me show you my solution. So just some good advice. Let's quickly first see who did the tutorial. Or shall I start with who did not do the tutorial? Put up your hand. Who did not do the tutorial? Just raise your hand. Just raise your hand. Okay. Rishal Maton. Festus. That's the lady there. Benedict, Julia, Paulus. Who else? Who else? Who else? Who else didn't do it? Okay. So can someone tell me, one of those people, Paulus, let's talk to you. Why did you not do it? Let's hear. I'm interested in why you didn't do it. And Aini and Paulus, tell us, why didn't you do it? Let me hear the reasons. Paulus and Aini, I'm waiting. Festus, talk to me. Why did you not do the tutorial? So now they are just quiet, right? Festus, I'm waiting. Why did you not do the tutorial?
My laptop says it's broken, sir.
So you couldn't do this. You didn't have any other option. How will you write the test on Friday? I'm basically telling you, that's not an excuse. That's what I'm trying to tell you. All right. And then some of you guys that raised your hands, you can lower your hands. Okay. All of you can lower your hands. But I just want to say that some of those names of people, and I'm not going to say who, you already failed test 1. You still don't do homework. So that means you are actually running the risk of failing test 2. So next year, I will see you. You will come back because you've already failed your test 1, and that one was much easier. So some of you, since you are not serious, I'll see you next year. Anyway, let's start. So the advice that I always give students is have 2 columns. Okay, so please have 2 columns, you know, where you just, and then also on this side, just have item, call it item or something like that. We are working, remember text doesn't really have a structure. So we call these ones here items, and then we have 2 columns. Because in some cases you will see that you first need to calculate figures. And when we calculate, guys, then we use this one. But if we have a final figure like this rental receipt, we will use it. We will use the last column. Okay, so when you have a final answer, you always use the last column. Now, guys, be very careful. If you have 2 columns and you calculate here, but you don't transfer it to the last column, I'm not marking that because it means it's still a working. And this one is normally, actually, this one we normally call the taxable income column. Okay, so have 2 columns. That's the first thing that I want to tell you about Friday's test. Then the second thing is always start from the top going down. Now, obviously, I know that you need to know your format, and sometimes your, for instance, this pension contributions, retirement contribution 11F, that one you need to do last and things like that. But that is fine. When you come to number 2, you take what you need to include in gross income. And then the last part, you just make a note to say, I need to do it a little bit later. I need to do it here, for instance, section 11F. And things like that. But a good point is to always start from the top going down. Okay, now let's start here. So obviously that was just background information. The first thing that I see here is basically, so tell me, did you guys include this 1.5 million? Tell me. Yes, Rishal Maton, do you have a question, or you, because your hand is still up?
No, sir, I don't have a question.
All right, thank you. So tell me, the 1.5 million, what did you guys do with that? Gila, what did you do with that? The 1.5 million.
They didn't include it because it's of capital nature.
All right. Okay. So he's saying he didn't include it because it's of a capital nature. So if it was not of a capital nature, where would you have included it? How would you have treated it?
Could you please repeat it, sir?
I'm saying if it was not of a capital nature, where would you have included this? Under gross income, under exemptions, under deductions? Where would you have included this? Okay, anyone else? It's okay. Anyone else? Who included the 1.5 million? Let me ask that question. Raise your hand. Talk to me. We include, guys, this is a group discussion. I'm not going to give you answers. I'm telling you now, if you guys don't talk to me, we will end this class and you will be ready for the test. So you better start talking because I'm not going to give you my solution. So who included the 1.5 million? Yes, Silas? Yes, Salim. Okay, so Silas said something. He said capital in nature. Guys, what bothers me about that statement is the fact that you guys don't look at dates. This house This townhouse was bought in 2011 already. We are busy with the 2020 year of assessment. So what you guys basically tell me is if that thing was not capital in nature, and that's why I asked Hila that question, you would have probably included this amount. But guys, dates are so important. In this whole sentence that you got here, the only thing that you needed to consider was the rent. All the other information was just background information. And then my next question was, where would you have included it? This 1.5 million. So obviously you would have said under gross income if it was in the 2020. If he bought this house in 2020, told me something about, year under gross income that I cannot include it because it's capital in nature or something like that. And you, furthermore, that is not even what you were supposed to say, because he didn't sell the house, he purchased the house. Those small little things, small little mistakes that people will make on Friday. Guys, if he purchased the house, then we should actually go and look under deductions if there's any deduction available. And you know that you will not have a deduction. Why not? Because it's a domestic expense. Also because it's actually a capital receipt. We haven't done capital gains tax, so that thing was not supposed to be considered. Now, guys, I hope by just this 2 minutes that I've now talked, actually speaking to you, that you have realized that you need to look at dates and you need to look at every little aspect of the transaction. This is a purchase. If he sold the townhouse, then we know we will now have to consider it for gross income, because it's now income, all right, or something like that. But remember, then you also said it's a capital receipt, which means we will not include the 1.5 million. But yes, guys, in this case, let's look at this part. On 1 October 2012 to rent out. During the 2020 year of assessment, he charged rent on the townhouse at 9,000 per month. Now, I just realized that this, so you guys can start marking yourself. So this should be 9,000 times 12. I know I've made some changes to this tutorial. That is why I had 9,000 times 10. So it should be 9,000 times 12. Did you guys get 108,000 rental income? Yes, let's listen.
Yes, sir.
Someone was speaking to me. Someone wanted to ask a question.
Yes, sir.
Silas?
How regarding the purchase of the house? Let's say it would have said like the person purchased the house for what? For trading purposes. It's an inventory. Okay, classifying as in how are we gonna treat it in terms? Will it still gonna say?
So, yes, I get your question, but you are overthinking this. First of all, if we are dealing with an individual, then we are dealing with an individual. If he buys a house, then that looks to me like a juristic person. And remember, this semester, our focus is not that much on juristic person in the sense that you are not doing companies yet, okay? But to answer you, if he bought the house to trade and all of that, then it would have been a different story. But once again, it would have been capital, you would not be able to include it in under deductions actually, because this is an asset. Remember, guys, we are dealing with gross income. Don't forget the basics. Gross income. When I buy a property, is that income? When I sell it, yes, then we know we need to consider, will I include it in gross income? But then we also have our capital receipt rules, and obviously you wouldn't have included it. Is that fine, Silas? Unless, of course, I sell properties, then it's a different ballgame. Like you said, then it's trading stock. So then I need to probably, then I will have a deduction available because now my product that I'm selling is houses. Is that okay, Silas?
Yes, sir. Thank you.
All right. So rental receive, mark yourself. So 9,000 times 12. and you get 108,000. Let's go to the next item. So next item, John receives a cash salary of 85,000 per month. Wow, impressive. Checkers contribute 8% and the employee 6% of the cash salary to a provident fund. So guys, that is the other mistake that you guys make in a test. You only read that first part and then you ignore the rest, you go to point 3. No, there are actually a lot happening in this one statement, in this one paragraph. So John received a cash salary, and guys, this is what I'm trying to show you. You need to eat this test on Friday like an elephant, piece by piece. Each sentence is, you need to consider it as relevant. You need to analyze the information before you actually go to the next one. And in some cases, yes, the answer will be no, I don't need to use this sentence, but as long as you consider it. So let's go to the salary. So 85,000 times 12, of course, and that gives us 1,020,000. And then guys, normally here, you know, I told you item, have a column called item, let that one be a big one. Then you have what we call calculations, and then you have your 2 columns, because these calculations sometimes carry marks. Can you see here, there are 2 marks here. So the 9,000 times the 12, because sometimes I might only give you for 8 months or something like that. So at least you will get the 1 mark for the 9,000. But if your answer is wrong, then you will lose both marks. So have a column called item, then you have a column called calculations, then you have a column 2 rand values. And the last one, remember the last one is the taxable income. Now guys, we can go to the second part, and our time is really running. Checkers contributes 8% and the employee 6% of the cash salary. So what did you guys do with this 8% and 6%? Let's listen to Silas. How did you treat that 8% and that 6%? Silas, talk to us. Silas, we are waiting. Fanny, how did you treat that? Fanny Angala?
So the 6% I calculated as provident fund, and I included it.
What was your amount?
It was 61,200.
Okay. Yes, go on.
And then I treated that as part of my fringe benefits.
All right, so Fanny, thank you. You are on the right track. However, your answer is wrong, but we will show you why. Anyone else that did something else? We will show you now, Fanny. Anyone else who did something else? You guys must sit there and breathe. So guys, let me quickly show you. Checkers contribute 8%. So that is the fringe benefit that we need to include. And the employees contribute 6% of the cash salary. Guys, this 6% is actually an expense for John, because John contributes. So you see, guys, and that's normally how it works at the workplace. So your employer will contribute a percentage and you will contribute a percentage. And that expense, the 6%, Fanny, that's why I said you are wrong. That 6%, we will only consider it here at the bottom under the section 11 deduction. There we will have to add all the contributions, all the actual contributions. But the fringe benefit, because guys, basically what we are saying is on top of John's salary of 1,020,000, he also get an 8% contribution of that basic salary monthly. That is actually an additional benefit that he gets. And you see, I call it fringe benefit provident fund. So he also get, on top of his 1 million, he actually get another 81,600. Is that fine? Silas, are you talking to us? Fanny, are you okay?
Yes, sir.
All right. You will see where we will use that 6%. Fanny, you will see shortly where we will actually now consider that 6%. But it makes sense to you that fringe, we are busy with his gross income now, and that obviously fringe benefits we set in our slides under special inclusions, fringe benefits will also be included as part of gross income. And you can see this is over and above his salary that he actually got this 81,600. Okay. Let's go to the next one. So for now, I would have written a note here to say this is my section 11F. That I also need to consider a little later. And if you know your format, I'm telling you now, if you don't give me this format, I'm drawing a line through it and you get 0. As simple as that. I might mark the first few things because that would be gross income. But if these things an F here already, then I'm drawing a line through it because it means you don't know your format, you don't know your framework. All right, let's go to the next item. On 1 January 2020, it was John's 25th anniversary at Checkers. He was presented with a 25,000 in cash to mark this milestone. At his 10th anniversary, he received 10,000 and 20,000 on his 20th anniversary. Now, I am interested in knowing, what did you guys do with this 25,000? Did you include it in gross income?
It's a special inclusion.
So Silas, you say you've included it, all right? It's a special inclusion. And then tell me, is there any exemption available or any deduction? Silas?
I can say there's an exemption.
So what is the exemption? What have you done? Tell me what you've done, Silas. Have you done the activity?
So there's an exemption for, excuse me, sir?
Did you do the activity?
So to be honest, I didn't do it. It was very up and down. I had something came up yesterday, so I couldn't even attend to some of the classes. Something came up emergency.
Yes, Silas, I understand, but remember, it's a trend. Every time I ask you, did you do this? Then you say no, which means you don't do homework. Even if you have problems or no problems, you don't do homework. That is your big problem, is you don't do homework. So I'm talking to the wrong person. Mute your microphone. Don't argue with me. I'm talking to people who did the work. Anyway, so yes, guys, the rules are, yes, like Silla said, we include the 25,000. It's a special inclusion. And then immediately, remember we said we don't have a framework when we first do gross income. We will immediately consider whether we will actually exempt any amount or if there's any deduction available. Now, guys, in this case, there was no exemption as the award was in cash. And you see there, I even say no mark if the exemption is used. Okay, so guys, the rules are, and I'm going to give it to you, write it down. Long service awards is only applicable for 15 years continuous service. So in a test, I'm going to say Mr. X works 10 years. You got a long service award, $5,000. Then you should say, this thing is not a long service award. In terms of the Income Tax Act, it's only a long service award, 15 years continuous service. So write that down. And then, guys, how you only have the exemption if it is a non-cash award. So if it's a watch or a cell phone or something like that, that's a non-cash award. Yes, it has a value, but it's a non-cash award. So there's only an exemption for non-cash awards, and the exemption is restricted at 5,000 Rand. So I repeat, 15 years continuous service, long service awards, 15 years and longer, and 5,000 Rand exemption, non-cash items. So in this case, guys, you could clearly see it is cash. We just gave you this information to confuse you a bit because in this case, it looked like, oh, okay, all right. So maybe you must also then exempt anything here. But this is cash, which means it is not a non-cash item. So therefore, there was no exemption available. No exemption as the award was in cash. Guys, if it was a non-cash item, let's say a watch that cost 25,000, then we would have said 25,000 minus 5,000. Remember, you are only you can only exempt 5,000 of the non-cash award. Okay, let's go to the next one. John received a travel allowance. Now, guys, yes, there's a question. Yes, go ahead, ma'am.
If it is not a long service award, then how do you treat it?
Then you just include the full amount in gross income and there will be no exemption, right? Elena?
Okay, thank you,
So,
sir.
basically, you would have treated it the same way as it is here currently. Just include it in gross income, but there is no exemption. Silas, you had a question?
There's a question. How if it's a compound reward? Let's say maybe a portion of a compound reward. Let's say maybe 20% of an award. It's a cash. It's in form of cash, and 80% it's in form of non-cash item, for example. In that case, you still just consider the portion which is cash, which is in form of cash. And then let's see if it's
I actually don't want to talk to you. You don't do homework. Yeah? So I should also not answer your questions. But anyway, I think you've answered your question. Then it's actually two transactions. You deal with the cash one separate and you deal with the non-cash one separate. Is that okay? And the rules still remain 5,000 on non-cash items exemption. Is that okay?
Yes, sir. Thank you.
All right. Let's continue. Now, guys, here we have travel allowance, but you know we don't do travel allowance now. We are actually not supposed to do travel allowance now in terms of your framework. If you don't know your framework, then obviously you will do it there. You will do it there exactly. But guys, let's continue first. So I will just flag it and say I'm gonna come to this in the next minute or so. Let me go to the next one. When John travels to the Checkers stores, yeah, I'm gonna want to actually for us to go here. So we are being told when John travels to the Checkers stores, he tries to return back home before bedtime so he can spend some time with his sons. However, on a few occasions, he had to sleep over in the other cities and towns, all in South Africa. Checkers always arrange and pay for his accommodation and pays him 380 per day for his meals and incidental costs. John spent 6 continuous days during the year away from home and did not keep accurate records of his expenses. Now, guys, what is the amount that we get for incidental costs? Yeah, but from SARS, if you don't keep record, the deemed cost. So what is the amount that SARS gives you there?
435.
Yes, well done. Telma, so 435. So guys, in this case, and it's very important, do you see there's my subtotal, my income there, there's my subtotal 1, but I quickly going to go down to, because your subsistence allowance actually only come after your travel allowance, after subtotal 1, but I've already considered it, so we will not include it now already, because guys, it's important that you actually have your framework correct. So I will just make a note there to say 435. So obviously when I do my calc, I would have said 380 times 6 days. What do you guys get? But I'm not including it yet because I need to get my format correct. 380 times 6, I think you get 2280. Then I would look at what does SAR say, 435 times 6. So SAR says 435. So actually, I will qualify actually for an exemption up to 2610. However, there are also special rules, but we can ignore that for now. Let's go to the next one. Guys, I'm still looking. The reason why I'm going down is I'm still looking for fringe benefits. Remember, we have to look at, you know, all my income here, which is my salary, my fringe benefits, and even passive income. We even started with the, if I had any interest, I would have also included it here before we get to subtotal 1. So let's continue. And then number 6. As part of John's transfer from Johannesburg to Cape Town, Checkers has paid the following amounts. Moving of furniture from Johannesburg storage facilities, storage of furniture, new school uniforms for the boys, architect fees, and So basically that would be a fringe benefit. We know this. We've spoken about relocation fees. Relocation fees. Now guys, what I normally do is, because I have to include the full amount, and then we have to look at, so you add all of this, then you look at what will be exempted. So let's start with the transfer cost or relocation cost. So all of that together is 118,150. And now I'm going to look at which of those will be exempted. Yeah? So moving, yes, that one will be exempted. Storage of furniture, indeed. New school uniforms, I'm interested. What did you guys write for new school uniform? Will that be exempted? Do you think the new school uniforms for the kids will be exempted? Yes, Gila?
Yes, right.
Why do you think it will be exempted? You are correct, but why did you think it should be exempted? Gila? We can't hear you. Anyway, for the sake of time, you guys are correct. That should be exempted. Why? Because guys, remember relocation fees. My kids had school uniforms where we were living. Now we are moving to another town, another school, so that will be considered a relocation fee. So that one will also be included. Then architect fee to design a new house in Cape Town. This case, 75,000. I want to know, did you guys exempt that 75,000 or not? Silas, would you exempt that or not? That 75,000.
I feel like it will not be exempted. Sir.
Why not? Because you didn't do your homework, right? Anyway, the answer is correct. Yes, it will not be exempted. Guys, I want you to go and check in your textbook what exactly qualifies for relocation fees. And the key word here is it's a new house that is built, and the act is very clear that that will not be allowed. That will not qualify. Something else that will qualify in the test, I'm going to give you something else. I will say John is selling his house. He got an agent, and you need to pay agent, commission and stuff like that. That will also be exempted because it's part of the move. Maybe it is necessary for him to sell the house. But building a new house from scratch, the key word here is new house. That will not be exempted. Therefore, guys, for the sake of time, include the full 118,150, and then only exempt those three, the three that we just spoke about, which is these three here. The 75 will not be. However, guys, you don't just leave out the 75, you provide a reason. You need to provide a reason. So you tell me architect fee, fully taxable, and that's not enough. I'm not going to give you the mark. You need to say it is excluded. It is excluded from location fees. And I will give you that extra mark. Right? Then, guys, let's go to the next one. One contributor 2,000 per month. Is there a question? No. Okay, John contributed 2,000 per month to a Sanlam retirement annuity fund. So I know this is also 11F when I go to my retirement annuity. So I don't, and what I will do here already is I will say 2,000 times 12, because obviously it's times 12. So I know we contributed 24,000. Next one, all the employees at Checkers at office can have lunch at no cost in the canteen. John had lunches to the value of 4,400 for the 2020 year assessment. During the year-end audit, the company ordered takeaway dinners for the financial personnel and the audit team. On the evenings, they worked late. The cost to the employer for John amounted to 8,500. Now, guys, for the sake of time, lunch at the canteen, it has a no value. Why? Because if an employee consumes the food while he or she is at work, then they don't have to include it in gross income. So it has a no. For tax purposes, we say it has a no tax value. Yeah? So you don't include it here. Lunch at the canteen, No value also because the employees are working overtime, operated by the employer for all its employees, and even the one for the auditors. They are giving the auditors that food because of the extended working hours. So guys, those are the reasons. That is what I will be marking, but you should not include anything, nothing to be included in gross income. And that brings us to income, our income. Now we can go to our deductions. And obviously the first deduction that we will look at is our travel allowance. So if you continue to read here, you will see this is just the donation. Remember, the donation comes very last, and then this is just the employees tax, and this is the provisional tax. So those things we will consider them later. They don't have to come into. Remember, guys, you've donated 10,000, so there's no implication for your gross income. Now, guys, we can go to our travel allowance. Now, the first thing for our travel allowance, this will be in your test. We will ask you travel allowances. John received travel allowance of 5,000 per month, 15,000 per month. So first thing that you need to do, and guys, this should not be in the last column. If you have this in the last column, I'm marking you wrong, because you first need to do your calc to see what can I actually deduct. So 15,000 times 12. Normally I put this in the second column where I told you I'm doing some calcs. So 15,000 times 12. So the travel allowance is 18,000. Now let's look at the kilometers. Now we were told kilometers. Travel between house and office, we know that will be private kilometers, right? Travel to Checker stores across the country, that is business. Travel for private use, that is also private. So in fact, my private is 2210 plus 4320, and the rest is actually my business kilometers. So you see here, guys, private is those two, business is that one, and that actually gives me my total kilometers. Remember, I need my total kilometers. Now, guys, in this case, clearly we cannot use the actual cost method because we were not given any, expenses. So they say he did not keep records of the actual expenses. So obviously we have to go with deemed cost. Now, guys, the amount for this motor vehicle, 442,000, including VAT. If you read it on your little table, just quickly go there. Wow, time is really against us. So let's quickly go there. That one. Just be patient. Connection. So 400,000, that is our vehicle. 442,000. So let's look at where does it fall. 442 would be in this bracket. So fixed cost is 133,147, and the fuel 153.20 cents. Remember, these two are always in cents, and 71.6. So we have to use those ones. And there you have it. And remember, for the fixed cost, you must always use that amount, that 133,147, divide by total kilometers. Guys, not business kilometers, total kilometers, multiply by 365, divide by 365. So guys, obviously the reason why I didn't do this is because you will get the same answer. Now in this case, I've now used the rands. So you get 7.679. Then the fuel, since it's 153 cents, obviously I need to convert it. How do I convert to rands? By dividing with 100. So if you say 153.20 divide, because there are 100 cents in 1 rand, guys. Okay, so 153.20 divide by 100, that gives 1.532. 76.16 cents divide by 100 will give you 0.716. So that is what you see here. Add those together, you get 9 rand 927. Please don't round off yet, guys. Only final figures should be rounded off. Then this 9.927 multiply by the business kilometers. Remember, now you need to multiply with the business kilometers. Okay, are you guys still there? Yes. So that 9.927 multiplied by 10,810. So the total amount that we can deduct from this 180. So you see, guys, and you don't include this 180 in your taxable income. Remember, only the taxable portion must be included in taxable income. So 180 minus this 107. So the difference is actually, I think, 72. So you see that. And this one, a positive plus a negative will give you. So the taxable portion is actually 72,693. That is what you need to include. Then, guys, we can now go to subsistence allowance. Once again, guys, these figures here, you should actually have them here. In your, I almost want to call it, this is our working column. And then the last one is our taxable income column. All right, so let's quickly go there for the sake of time. So 380 times 6, that is 2280. Then SARS allow 435, like Talma told us. 435 times 6, you actually get 2,000, you know what I wrote here. Yeah, you actually get 2610. However, guys, you cannot deduct more than what you actually got. So you are actually restricted to 2280. I repeat, you see here. Yes, the 435 will give you more than 380, but you cannot deduct more than what you have got. Because if you say 435 times 6, you actually get 2,610. You cannot deduct more than what you actually got. That obviously gives us subtotal 2, which is now this in the subtotal 1 plus the 72 plus, and in this case, you didn't have to include anything because that minus that. So that gives us subtotal 2. And now, guys, since there's no amounts here, that would also ultimately be subtotal 3. And now we can look at our deduction, our section 11F deduction. Now, guys, this is one that people sometimes struggle with, but there's nothing to struggle here. So first step 1, you look at what is my actual contributions. What is the total contributions that were made? Guys, once again, this figure should not come in the last column. It should be in this column here. So guys, in this case, we had 24,000. That's the Sanlam one. Then we have the 8%. Now, don't get confused because we have already included the 8% here as well. Don't get confused. Here we are looking at what was the total actual contribution. So the 8% and the 6%, Fanny, and the 6% of this amount. So if you add all of that, you will get 166,800. Now, guys, we will now calculate to see what of that 166,800 can be a deduction for us. Okay. Now here we look at, so obviously limited to the lesser of. Now, guys, your maximum amount is 350,000, and now we need to look at 27%. Whichever one is higher, that is the one that I can use. So 27.5% of remuneration. Now, guys, very important. Your remuneration is obviously all these amounts here. So basically excluding the rental income. Remember, rental income is not remuneration. Remuneration due to your employment, salary, fringe benefits, all of that, even the transfer cost. So it's those amounts there plus, and I'm giving you notes, write this down, plus 80% of your travel allowance. Only 80%, guys. That is just a rule that you need to write down. So remuneration is all of that plus 80% of your allowance, okay? Your travel allowance. So you get that for remuneration. Then taxable income, including CGT, that is automatically total. You see, it's basically subtotal 3. So now we need to see. Right. Which of these two are the highest? Now, guys, you can clearly see the highest one between the two. 1382 is higher than 1342. So we will obviously use 1382. And what is 27.5% of 1382? that will actually give you 380,130. So just check here. So you see I've used 27.5% of 1382. So you actually get 380,000. Now guys, what we are saying is for this year, I could actually deduct 380,000. However, I'm also limited to 350,000, even though this is 380. If this amount here was 350, 360, I would only be allowed to deduct 350. But in our case, guys, since it's way less than 380 and 350, we can deduct the full 166,800. Now, guys, you don't say, and this one is a bit different than all the others that we've done. You don't say 166,800 here, and then you say 166,800, and then you include 0. No, that is not what you do. You do it a bit different. You get your actuals, do the calc, and then the amount that you've calculated, that is the deduction. Why is that the case? Because you've included 81,600 here. So basically this is now the deduction for that amount, and you even get a bigger deduction in terms of section 11F, and we spoke about this. I told you it's because our government say that, or government say that you are actually looking after your future when you have this. So you see, you even have a bigger deduction than what was actually contributed. Then, guys, donations. We go to the donations. It should be 10% of taxable income. Now you get subtotal 4. Now, obviously, it should be 10% of that. Once again, guys, you are limited to the amount that you actually contributed. Even though this 10% of 1.2 million is 121,000, I cannot deduct 121,000. I'm restricted to what I actually donated. And in this case, he actually donated 10,000. Therefore, 10,000 will be the deduction. That brings us to our, this is actually your taxable income, which is 1205. Then your tax per the tables, guys, you use this table to calculate the tax for 1.2 million. And we've done this a lot this semester. And then, guys, once you are done with that, you need to use your primary rebate. Now, guys, let me quickly give you the rebate for 2020 is actually 14,220. Write it down, 14,220. And guys, if I give it to you in a test, you must always use the amount. It might be here, the rebate, then you must use the amount that I give you. That is also an amount that can be deducted from the tax. Then we go to our employees tax. In this case, 300,000 was already deducted. Then there was provisional tax deducted. So you need to also deduct all of that. So this minus this, minus this, minus this, that will give us our income tax payable. That is the end of this tutorial. I'm sure it is a lot to process, but guys, it all makes sense. I'm going to upload the solution right now, and then obviously you can go through it again if you have any questions.